This video explains how to compute the supply chain performance measures such as inventory turns, days of supplies, AR turns, collection time, AP turns, payment cycle, and finally we can compute the cash to cash cycle. Also we can compute asset turnover and the ROA. Um, for this video, I will use Costco, Target, Amazon from financeyahoo.com. So you can visit the finance.yahoo.com and you can search those company. First of all, I will type Costco and you can find the Costco information. And from this, you can click financials. Then you can find the income statement, the annual information, income statement, and the balance sheet. So basically, there is a TTM. TTM is a current year. Last year, 2020, they closed this amount. Then we will use these values for our example. For revenue, we use 2020 revenue. This is total revenue. I just copy this information, and also cost of goods sold. Instead of cost of goods sold, they use cost of revenue because they sell product, not only product but also service as well. So that's why they use cost of revenue. So you can copy cost of goods sold or cost of revenue, and profit margin, gross profit will be computed later. Profit margin, we can compute this profit margin later. Also EBITDA, earning before income before tax. So here, so you can find the EBITDA, but this column is blank. But however, you have normalized EBITDA, so we can add this EBITDA number here. And then now, so you have these are income statement account, and now you have to compute, you have to copy balance sheet account. So click balance sheet, and you have this chevron mark, and then click again, and you can find inventory. So you have to copy this inventory value, inventory, and account receivable. So here you can copy account receivable, copy and paste, and the asset, total asset will be this value. So you can copy and paste. And also we need AP to compute the payment cycle. To get AP, you can click this total liability. Then you can find this number, and out of this you can find the payable and the accrued expense. So you can copy and paste. So this is Costco information. Now you can get target financial performance target. So you can type target, and then you can find the TGT, Target Corporation. So again, you can click financial, and target, they close January, so we will use this January information. So revenue, same way, you can copy and paste. And the cost of goods sold, instead of cost of goods sold, you can copy cost of revenue. And also you can compute the EBITDA. So you can move down, and you have this normalized EBITDA. So you can copy and paste. These are income statement value. So now you can compute, you will copy balance sheet account. To get balance sheet account, you can click here, total asset, and receivable. You can copy receivable. You may copy only total receivable, or you can copy only account receivable. That's, I mean, either one. Inventory, and also asset, total asset, and finally you can copy account payable. Current, click this, and the current liability, and you can copy paste here. And finally, so we will compute Amazon. To get Amazon information, you can type Amazon here, then Amazon, the AMZN is Amazon stock symbol, and click financial again, and then basically they closed 2020 December, and the total revenue, cost of goods sold, cost of revenue, and also you can compute the EBITDA. So this is a normalized EBITDA, and also you can, these are income statement account. Also you can copy balance sheet and the total asset, total asset, and you can click the chevron mark and the current asset, and you have a receivable and the inventory. This is receivable, account receivable, and also there is inventory. You may click inventory and the receivable for detail account. So here you have account receivable or finished goods only, but sometimes they provide detailed information. And finally you will get account payable. So here PP, so actually here total liability, total current liability, and payable. So you can copy this payable information. So this is account payable. So basically we copy all this information. Now first of all, we try to use names instead of individual cell number, so we can copy all these, and then copy all these, and you can click formula and create from selection, and basically your names are from left column, and then click OK. And now for gross profit, basically you can type revenue minus cost of goods sold. Then this is individual name has a set of array data, right? Set of array data means for revenue we have a three companies number, cost of goods sold we have a three data, right? So that means you just type all these and then copy and paste. Simply you paste, I mean drag down, then you will get all this information. And the profit margin is gross profit. So gross profit divided by revenue. So this is also, again, it covers all you know array number, I mean set of information. So you can copy and paste, then you will have this information. Also, if these are percent number, you can change percent, then 13%, 30%, 24% of profit margin. And also now you can compute inventory turns. So what is inventory turns? Basically inventory turns is what? Cost of goods sold, COGS, divided by inventory, average inventory. So then you can compute this number. This is our inventory turns. So you can copy and paste. Then target is 6 times inventory cycle. On Costco, Amazon, they have almost 12 inventory cycle, means their average inventory days is 1 month or 30 days. Again, so you can use 1 minus inventory turns, right? Inventory turns times 365 days, that is days of supplies. And you have this, and target case, their inventory days is almost 2 months, so that's why almost 60 days. And AR turns, revenue divided by AR, so that is AR turns. AR turns means what? How many frequent, how often do they collect their cash? That is AR turns. Also, you can compute collection time, collection period. So 1 over AR turns times 365 days. That is a collection time period. So basically, Costco and Target, their collection time is only 4 days, but however Amazon case the collection time 23 days. AP turns again, cost of goods sold divided by AP. So that is our equation formula. So you just copy and paste. What is payment? Payment is again 1 over AP turns, right? AP turns times 365 days. That is a payment cycle. So what is your cash to cash cycle? Cash to cash cycle is days of supply plus collection and minus payment. So then Costco case, they have negative numbers. So in the classroom we said negative cash to cash cycle is very good. For this case, Costco negative 14 days, Target similar, Amazon case 92 days. Why do they have 92 days? Because their payment to their supply is very long. Means they do not, I mean, their days of supply is only 1 month, and their collection period is only 3 days, 2.5, 23 days. But however, they delay their payment to their supplier up to 145 days. This is almost 4 months, right? So it means their supplier has kind of, probably supplier has a weaker point, so that's why they will receive this, their payment at a later time. And also we can compute the account asset turnover. This asset turnover is, again, we can use revenue divided by total asset. This means we just use total asset to generate revenue. So that is asset turnover cycle. So means to generate, the revenue, Costco case, they use very, very effectively. But Amazon case, they have lots of warehouse, central warehouse. So that's why even if inventory turns very good, similar, but however in total asset, Costco has very effective asset turnover rate. And what is ROA? ROA is basically return over asset. So what is return? Typically we can use EBITDA and then divided by our asset. So then we invest our asset, total asset. What is their net income or EBITDA? So this is ROA. So ROA for this retail business, their ROA is 0.12 or 0.16 or 0.15, something like that. So we have this kind of information. So from this, basically keep this in mind. Basically, you can copy basic information, revenue, cost of goods sold, and the AR, inventory, asset, and the AP. These are basic financial information. Using this, you can compute the gross profit and profit margin, and also you can compute inventory turns, AR turns, AP turns, and finally you can compute the cash to cash cycle. At the same time, you can compute the asset turnover and return on asset.